Thank you everyone for coming. And today we would like to invite Mika Matsudate from Sakura Bookkeeping in Pemberton. She's going to facilitate the info sessions and workshop for tax tip for families. First, we would like to begin by acknowledging that we are fortunate to be able to gather on the unceded traditional territory of the Squamish and Littlewet nations. Without further ado, I will pass this to Mika. Thank you so much for joining here today.
Okay, thank you. Is it okay I start speaking now?
Go ahead.
Okay, thank you everybody for coming and join to the today's workshop, tax tip for families. Specifically for the 2020 tax return, we know that there is a few changes to these tax returns. So I'm going to cover the some topics I'm going to talk about today. I just briefly made agenda for today's session. This is there's a three big categories I'm going to talk, and number one is what's new for 2020. There's some changes and then also some income you received specifically for the 2020, and then probably a lot of people have there's some questions how we report in the tax returns or how we get the information and stuff. And then second part will be the tax return deductions. This is the same deduction as other years, but just to remind again, or if the people who going to file the tax return for the first time, those tips, it will be benefit to you uh, to file the tax return. And third part will be the saving for the kids. This is not exactly for the tax return, but this is very benefit knowledge to have if you have the kids. So I'm just to cover this step. And so the first part, what's new for the 2020? I'm going to talk about like there's a four items: the home buyer's plan, and second one, home office expenses. The third one, digital news subscription expenses, and the last one will be amount received related to COVID-19. And the second part, the tax return deductions, I'm going to um, explain about the medical expense and childcare expenses and RRSPs. And the last one, the saving for the kids, I'm going to talk about RESP. Okay, so now let's start from the first topic. What's new for 2020? Home buyer's plan. There is the home buyer's plan itself was existed for a long time, and then seems like since 2020 they added the extra benefit for the people who can access to this benefit. Um, the home buyer's plan is a program that allow you to withdraw the funds from your RRSP to buy your house or build your house. So when you're going to buy the house, you can use as a down payment from the if you have the RRSP registered retirement saving plan. um, I'm going to explain. If you don't know about the RRSP account, I'm going to explain a little bit later today. But if you do already know about RRSP and then you already have the account and then you have the funds available in this account, you can also transfer the funds to buy the house to pretty much basically you can use for down payment. And the funds you can use is up to 35,000. And this program was typically for the first time home buyer, or you don't have the mortgage for 4 years, and then you you don't have the you have the enough funds in the RSP, even not the first time you can use for the second time or the third time. But the typically most of the cases is for the first time home buyer. And what's the new to this account is the if you break down of the marriage or the common law partnership, you can also access to this home buyer's plan, even though it's not your first time buying the house. So it may be benefit for some of them, some of you. And if you are struggle this type of the situation, and then you need to have the another house, or you have to move out or move to some other places, that might be beneficial to have this knowledge. So yeah, and let's move on to the second one, home office expenses. So as we know, in 2020, lots of people start working from home, and then the government has decided to give a little bit of benefit to claim the credit for the working from home. And there is if you face to this situation, you got to work from home in 2020 due to the COVID-19, or your company uh, kind of push you to work from home, and basically you use your house as a workspace. And the home office expenses itself has existed since before, but for the 2020, they have added the some simplified method to calculate how much you can deduct for this home office expense. Probably some people um, it's first time claiming the home office expense, and then they don't know what to claim, or like they don't like them. If you don't like the complicated the calculation, the simplest way is apply the temporary flat rate method. Basically, this is a $2 per day, maximum of the $400. So if you are uh, like basically 200 days in 2020, if you work from home, you can simply apply the $400 deduction into your tax return. And then if you chose to use this method, you don't need to have any receipts. You don't need to complete and then get the signature from your manager or employer, which is form 2200. So people who are not sure what you do with these expenses, just go for it to use the simplified method, temporary flat rate of the $2 per day. Just you can claim the $400. And then if you like $400, it's not really the benefit for the some people. Some people could claim way more than the $400, and then you have to move on to detailed method, which is you have to calculate square feet of the area you use for your work, the pretty much the computer and the desk, and then what's the total area of the house, including the kitchen, bathroom, and then what type of the expenses you have paid for the house, uh, internet fees, or the hydro, uh, the gas cost. So it's a quite a bit of the calculation behind, and then you can only claim the percentage you use for the office. So it's you, and then also you need to have the form signed from your manager or uh, the owner of the company. So if you like to go, if you like to compare which way is the benefit for you, yeah, please go ahead. But it's a little bit more work ahead. And then if you are self-employee and you used to claim the business use of the home office expenses, those people, if you are the case, it hasn't changed. So just stay as same as the last year, same as the previously you claimed. So, but this is a temporary flat rate. It's gonna be very, very benefit for a lot of people. So yeah, it's you better be the member when you do the tax return. So let's move on to the next one. This is also new tax credit. It's called the Digital News Subscription Tax Credit. The government has decided to give them subscription costs between 2020 to 2014. You can claim the as a tax credit to reduce your tax owing amount, which is the national news. It have to be subscribed to the uh, the news, the media have to register to the qualifying Canadian journalism organization. So how to know if you are allowed to claim if you subscribe this type of the news magazine? Look at your receipts, and then if you can find the QCJO, qualifying Canadian journalism organization designation number on your receipt, and then you are eligible. Basically, I try to look for the name of the media. I wanted to have the list of the names, but obviously there is no updated version of the list yet. And some other people are searching the same way as me, and then they are complaining in the website. Yeah. So just probably at this moment, it's for the next 4 years. So yeah, at this moment, just look at your receipts if you subscribe. And then the amount you can claim is up to $500. So, and then just to remember that this is a non-refundable uh, digital news subscription. So the non-refundable tax credit, it means if you don't need, if you have not paid tax, or if you don't need to pay tax, and then you have claimed this tax credit, you have the subscription to the newspaper, and then you spend a $500. Can I get a $500 back from the government? Actually, this is no. It's just to reduce the existing tax amount to um, reduce the number, reduce the amount by how much you spend. So if you have no tax obligation, and then maybe you don't need to worry about this tax credit. Okay, so yeah, this is a digital news subscription tax credit. It's for the next 5 years, kind of we have to keep in our mind for a while. Okay, so let's move on to next one. Okay, amount received related to COVID-19. A lot of people has received the government remedies grant or funding or the benefits. The most of the people probably receive the Canadian Emergency Response Benefit or Canadian Recovery Benefit, or just apply for the EI. And then those incomes are taxable. And then you need to report in your tax return. And where do you find this amount? Is if you receive like serve CRB or CRB, you can find the amount on the T4A, which is the government may be mailing to you in the mail, but I'm not 100% sure is everybody can receive by the mail in the paper copy. Also, the same for the EI. You should have the T4E to prepare the tax return, and some people receive by the mail, but often people has no receiving the paper copy. If you have received, please make sure you have this copy to prepare your tax return. And then if you haven't received in the mail, you can find those slips in the My Account. And in the My Account, I'm sure there is, I believe it was on the right-hand side, T4 slips copies in the last 10 years, or it should be easy to find. Otherwise, you can Google search or call the government to get some help. So, yeah. And then let's move on to next topic, tax return deductions. So tax return deductions, probably the big one is medical expense, especially if you have them baby, or like, yeah, if you have a like newborn baby, that will be a most beneficial information. And otherwise, you always want to know what can deduct and then what's the medical expense you can claim. So here is some summary of the what you can claim and then how to calculate. So there is a two big section. Medical expense, of course, if you have the receipts, that's great, but sometimes you don't need or you don't have. So I just made it like kind of the list with the receipts. What what you can claim with the receipts. Of course, all the medical expenses paid by you, like when you go to the dentist, when you go to the physiotherapy, massage, maybe some of the treatment wasn't available in 2020 due to the COVID-19, but still, some people really have to. It's pandemic or no pandemic, doesn't matter for the health situation. So yeah, you need to have those receipts. And then also when you go to the hospital or visit the doctor's office and then you pay for the parking fees, you can also claim as a medical expense. And also the hotels, you have a surgery and then you needed to stay close to the hospital for a few nights, or if you're having the baby but hospital wasn't able to take you as a patient at the moment, and then you stay in the hotels, or your partner needed to stay close to the hospital. Those receipts you can claim as a medical expense. And what's the expenses you can claim without a receipt? It's if you go to see the doctor or hospital uh, more than the 40 kilometer away from your home, you can claim the travel expense as a part of the medical expense. What's the mean is if you, let's say like most of the visitor people have to like, there is a clinic, but it's not a hospital. And then often you have to drive down to the Squamish or Vancouver, which is more than a 40-kilometer away from visitors. So most of the people will be eligible to claim those travel costs. And then when you um, go to the hospital, so there is a fixed amount of the meal expense and the vehicle expense you can claim. What is the meal expense is you don't need to have the receipts. Doesn't matter which restaurant you go, McDonald's or the healthy organic store. It's a flat rate of the $17 a meal, maximum of the $51 a day. So basically 3 times meals a day. And then also if your some partner or supporter come with you to help you, you can claim the meal expense for those people's costs as well. And also the vehicle expense, you don't have to have the gas receipts or any receipts. There is a flat rate to calculate based on the kilometer you drove. So basically you can, if you calculating yourself, you can put the address in the Google map from your house to the doctor's office or hospital you go. It can give kilometers between the distance, and then you can simply use the rate for our if you're doing for the 2020 52 cents a kilometer. So this rate is it's similar every year, but penny or couple pennies are different every year. Government decide based on the uh, market of the gas price. So for the 2020 is the 52 cents a kilometer. So you can use to calculate this cost. And then other things you want to know about medical expense is the tax return is claiming from the January to December, the calendar year basis. But for the medical expense, you can choose the 12 months period yourself, which means, let's say you had that, like especially like when you're going to have a baby, it's most beneficial because like you're not gonna get pregnant to give a birth within the same year. It's impossible. So it's always kind of before after the year end period. So you can choose the 12 months yourself. Let's say you had a baby in the April 2020. So most of the expenses were between May 2019 to April 2020. You can choose this is the my 12 months period for the medical expense. And then you can claim on the 2020 tax return. So the tax return year you chose, it's going to be the end of the period when you have end the 12 months period. So if you have some expenses, let's say you start to have the lots of the expenses since September 2020, and then still keep going like in the 2021. So probably you maybe want to choose to claim those medical expense in the next year, 2021. You understand? Hopefully I don't make you confused. Why you want to gather all those expenses together? It's medical expense is not deductible or the full amount. The amount you can claim as a medical expense is 3% of your net income, exceeded the amount of 3% of net income, which means, let's say your net income is $30,000. 3% of the $30,000 is $900. So you can claim as the medical expense if you pay more than $900 and then only exceeded the amount of $900, you can claim as medical expense. So that's why you want to gather as much as expense you can to claim as a medical expense. If you split them a little bit every year, you may be not eligible to claim as a medical expense. That's the reason behind. And especially for the having the baby, those 1 year before, after prenatal and postnatal time of the period is the most costly medical expense time. So you want to gather, and especially we live in the Pemberton, Squamish, Whistler. We are pretty far from the Vancouver, and then a lot of people have to go to the city for the doctor checkup and having the baby, and just to stay in the big hospital. So for us, it's a very, very benefit to take the 12 months period, and then also knowing the travel expense is part of the medical expense. So yeah, please do use this benefit when you have a chance. Okay, and let's move on to the next one, the childcare expenses. When you have the baby or child, and still you have to go to work, and it's the daycare is a very expensive around here, and in those expenses you can claim as the childcare expense to reduce the income tax. So the type of the expense you can claim is the childcare services. That's you hire the nanny or you hire the babysitter. Those costs you can claim, and then also you bring your kids to the daycare center. Those costs you can claim. And in the summer, probably last year, a lot of kids activity has canceled, so maybe it could be the less the day camps for the kids was available, but still if you do have some, you can claim as the childcare expense. And the ski school, I don't know if I don't think there is a ski school this year. Maybe I'm not 100% sure, but if there is, yeah, you can claim as a cost. And then a ski school, like I in the previously I had questions. Okay, I pay for the ski school cost in the spring, not the spring, in the fall before the ski season start. But actually, the ski school itself is like starting end of December, or like almost like from the January to April. And actually the year the kids going to the ski school is the following year. And if the case, like when I can claim the ski school expenses as a child care, and then actually this is goes to the day of the receipts when you paid. If you paid amount in the, let's say, November 2020, even though the ski school was for January to April, you can claim as a 2020 tax return as the childcare expense. same for the following year. So just to know that it doesn't matter when is the actual services is going to be happen. Actually, you can stay on the when did you pay, when the money transaction was made. So that will be the base. So yeah, and then other things you have to know is the if you have spouse or common law partners, one of you can claim those expenses, and then who can claim is lower net income person. Means if your husband your partner makes the $50,000 and then you make the $20,000, that case you have to claim, not him. And then, but unless there is some special situation, if your partner was going to the school or was not able to carrying the kids, even my income is higher, that case you can choose to claim the childcare expense even though I'm the higher net income person. But 80%, 90%, most of the time, you can claim if your income is higher than the other. So lower net income person have to claim. Okay, so that's kind of the important part you have to know. And yeah, let's move on to next one. It doesn't change. Okay. Yeah. Here you go. Registered Retirement Saving Plan, RSP. Maybe a lot of people know about this saving plan already, but in case some people has not known yet, this is the account, especially like if you're coming from the other countries, and then maybe it's not all the country has this type of the benefit, I believe. And then this is the one of the Canadian uh, like benefit to save or reduce the income tax. So what is RSP is basically you save your money into the special account. It's called the RSP account. You can ask your the bank or financial provider. Those people can open up the account for you. And then what it does is the biggest things is reduce your income tax. If you work in a restaurant, if you work in the hotels, if you work on a mountain, like your paycheck is the same, and then like they already deduct your tax and then everything, and then like you have almost no control of reducing your income tax. But only this RSP, you can control your income to reduce, which is like your income tax will be less. So there is some rules applied, but this is the biggest benefit you can get to uh, not to lose any extra money for the government. And then other things will be uh, not directly but indirectly affecting is uh, Canada Child Benefits amount will be increased because how they calculate the benefit, the child care benefit, is the based on the net income. So if you can reduce the net income, you can they will give you more child benefit because that's the based on the net income. So I believe that this is another big benefit as well. And also lowering your net income. Sometimes like there is supplemental medical uh, benefits were available from the municipality or the province or any other community group, you maybe become eligible for those benefits as well. So it's it's you still have to plan it, and then you still have to know what's you're aiming for, but still it's a big kind of the benefit to know about uh, to basically controlling your tax return and then controlling your income and then tax obligation. So it's sounds like a difficult, but um, if you once you open up, it's pretty simple, and then uh, everybody can understand easily, and then it's no complicated. So but just the one things you have to remember is of course the government is deducing your income tax from you saving your just own saving account. So what's that mean is when you withdraw from this saving account, from the RRSP account, you have to include it in the income in the year you withdraw from the account. So that's not a disadvantage, but that's kind of a rules you have to know. So for sometimes like so this is just theory for like retirement saving plan. So you don't want put too much money into this account if you are going to withdraw in the short term, like the next couple years when you buy a car. You don't want to take the RRSP account withdrawal because you have to put into uh, income, and then you have to pay income tax on it. So that's kind of you have to know, and then you need to plan ahead what's the benefit you're looking for. And then of course, like, okay, I have a lots of them, I have a inherited cash, and then okay, I'm gonna put like RSP all my money. Well, no, like there is a limit of the contribution where you can find how much you can put it into the RRSP. If you have filed the tax return previously, you can find the amount on the latest tax return of the notice of assessment. The notice of assessment is the letter, but maybe now it's coming to my account, the email. Uh, Once you file the tax return, the government will process the tax return and then send you the letter. We have processed your tax return, and then here is a result. That's called a notice of assessment. So in this letter, you can find the limit of the RSP contribution for the following year. And then also there is another deadline to uh, RRSP, because basically you can control your net income. So the government is giving the deadline. Let's say like for this 2020 tax return, you want to save the some RRSP. The due date should be March 1st, 2021. So which is 60 days after the year end. So it's always let's say that for the next this year 2020 tax return deadline is a March 1st, 2021. Next year for the 2021 tax return will be after March So it's a March 2nd to March 1st, 2022. So like all the money you contributed like in January, February this year, it should be included in the 2020, not the 2021. So again, RSP, here is a little bit of the kind of stretch of the uh, year period of recognition. So the RSP is from the March to the next year March 1st, or sometime every 4 years, it's come the February 29th. That year, it will be up to February 29. Okay, so yeah, if you are thinking, especially like this year, we received the CERB or CRB or EI, and then those benefit hasn't deducted a lot of taxes yet, and then if you have some stretch to reduce taxes, or if you have some extra funds to save somewhere else, maybe it will be very benefit to use our RRSP account this year, not to pay the income tax for the benefit you receive from the government. So yeah, maybe just talk to the bank and RRSP provider. Okay, and last topic, saving for kids. This is a little bit confused with the RRSP, but this one called the Registered Education Saving Plan, the RESP. So basically, what is it? Is education saving for post-secondary school. The kids after the high school go to the university, go to BCIT, whatever, just getting the education after the high school. You can use this saving account money to support the kids. And then what is what's the benefit of the saving plan is maybe one of the biggest one. If your net family income is lower than the 47,000, everybody can get $500 just to open up the account. Even you have no money to save, like you just have the newborn baby and 2 months old, like it's a little bit like so far future to think about okay, this girl or this boy after the 18 years, so how we gonna pay for the education costs. It's a little bit like far ahead, and then you are maybe just busy enough like giving feeding and then cleaning up the diaper and stuff. But it's sooner it's better to start, because you don't need any money to start basically, and then you can get $500 just to open up the account. And then also if your net income stayed lower, you get an extra $100 each year. And then if you start to put your own money to this saving account, government is match with the 20% of what you saved in the account. So let's say if you saved $100, the government will give you the $20 extra to the account. And then of course this account, they're gonna invest into the somewhere nice and safe, and then it could grow the money the best way. So basically money will start to creating the money, and then all the interest you earn in this account is non-taxable, and then just stay within the account. So it takes a long time to save the big amount. So sooner you start, it's the better it is. And of course, like in the end of the day, no one didn't use it. It's your money. Of course, the government put a 20%. So those amount you have to give back to the government, but your money you put it into the account won't disappear. So it's just some special uh, saving account just for the education. And if you have I recommend anyone should start. Even the amount doesn't matter, like $20 a month, $100 a month, like even though it's a small amount, you should put it into the saving account. Uh, that will, like, it will add up, and then it will be benefit for the later year. And then the other things you have to remember is that this RESP saving amount, it's not the tax deductible. So it's not the RSP. So kind of please do not commingle, like mix together. So this one you can deduct from the tax return, but you have a lots of benefit to save into this saving account, like 20% of the whatever you save, the government will match up. So this is yeah, highest return you can ever get. So yeah, please do remember this. And then if you don't have one yet, yeah, please go for it to ask to the bank. Okay, so this is the today's workshop I wanted to discuss. And then yeah,
Thank you so much, Mika, for such
okay.
an informative session. Lots to learn. Lots
I
of
know.
great tips and advice.
Yes, I know everybody have a different situation and then a different story about the taxis. So hopefully, at least one things everybody can get a tip from today. But yeah,
Yeah.
it's every year everybody's it's always complicated. So if anybody have any questions, I'm happy to help within my expertise. And please do not hesitate to contact me by email, or maybe email will be the easiest way to contact me.
Perfect.
Yeah, thank you
Thank
very
you
much.
so much once again for great tips and advice. I think we learned a lot here. And thank you everyone for joining us here, and we'll see you next time. Bye
Okay.
bye.
Okay, bye bye,
Thank
thank
you. Bye
you.
bye.